Now we have him in the studio. What a treat. Jonathan Gassman is the CEO of Gassman Financial Group. That is a group that has actually been around for nearly a century.
3 generations.
3 generations.
Yep.
Wow. Jonathan has decades of experience guiding clients with strategic advice, counsel, and perspective to create financial security in their business and personal lives. Jonathan is a co-founder of G&G Planning Concepts, a financial planning firm and one of the leading wealth management firms in the city. He's also the chief financial strategist at Peer Core Solution. How he divides his day, we'll find out in tonight's show, or day and night, because I just don't know how he gets it all in. Now, with that intro, we give a warm welcome to JG, Jonathan Gassman. Jonathan, thank you so much for being with me today.
Thank you, my friend Yitzchok. I am so excited and delighted to be here today. I've been looking forward to this. And,
thank you. Let's jump into and we're going to tap into your real-world know-how. And again, I shouldn't say in your strength, because you have a strength in so many areas.
Thank you.
I can't just say your strength, but I think it was a couple of weeks ago, I noticed a tweet that you had sent out, 11 reasons why year-end tax planning matters. Now, we are in 2016, but this is relevant anytime because you can never, be early to jump in and really plan yourself correctly. So I'm going to ask you, you had a quote in there, while good tax planning may help you save money, it can also help you achieve a variety of other financial goals. What did you have in mind when you said that?
For the most part, unfortunately, a lot of people, when they think about planning, they think everything is tax motivated. Mm-hmm. And we look at that as it's secondarily as part of an overall plan. Taxes should not be the primary factor in why you act on certain things. So as I began to look at strategies, products, solutions that we bring to, our clients and people that seek our assistance, we realize that it really isn't all about the taxes. So there are things that people should be doing now, regardless of the tax impact in terms of helping them build wealth, whether they're a business owner, whether they're somebody just graduating from college, starting out their life on the long road ahead, whether it's somebody that's just had a child, or whether it's somebody who's taking care of a parent. There are so many things that people need to consider to make smart choices about their money that go beyond just taxes.
It's a great point you're saying, because I guess people in general, we're all humans, and we have a habit of kind of looking at it like, it's the tax man. It's all about that. It's how do we save something? But you're saying, don't just look at it that way. You say, wait a second, let's have some vision here. Let's look down the road. It's not just all about we could save a few dollars.
Yeah, and sometimes it's about just pay the tax today and be done with it. A lot of people look at a lot of tax deferral techniques, such as contributing to their 401k, putting away money for retirement, socking away money for specific things, putting money in a 529 plan for college education or whatnot. And all they're really doing sometimes with some of these strategies is just kicking the can down the road. Because who's to say, right, when you retire, you're going to be in a lower tax bracket? I give you the blessing, Yitzchok, that when you retire, you should be making millions of dollars and you should be in the highest tax bracket possible. That means you made a lot of money. So it's really a function of making smart financial and sound strategies, and that comes along with that are some terrific tax benefits.
Now, as we on that note, as we welcome in 2016, what are some of the top tips that you would recommend to the listeners of Mind Your Business?
Well, I think there are some simple, single, doable things.
Okay.
And one is create a plan for yourself. What are your top 10 goals for the current year? And you know me, being a graduate of a lot of different programs, It's all about results. Anything other than a result is an excuse. So identify top goals, 5, 10, whatever it may be, whatever you think is achievable, lay them all out. So the first thing is identify what your top goals are for the year, and then break them down into simple little chunks that you can bite at every single day. Do something that will help you achieve that particular goal that you have in mind. Maybe it's for retirement. So it's about saving money out of every paycheck, right? So you contribute to, let's say, a 401k or a 403b plan. So as long as you create some goals, that's the first step. Then after you've created the goals, every quarter, every 90 days, sit down and reevaluate. Here's where I was, here's where I am, now I have to fine-tune and course correct. and you adjust. So I think the key in anything that we're going to do is creating some goals. If it's in your head and you don't commit it to writing or you don't tell other people, the probability of it probably happening is next to zero.
I mean, you're reading my mind because I'm saying to myself, my next question is going to be, how important is it to put it down and commit it on paper?
I think it's huge. I mean, you're a business owner and you know what it's like to run an operation and have a team of people that, you're the leader. You have followers. So for you to lay out the grand master plan, the 10-year, the 5-year, the 1 year, the quarterly, it motivates, it inspires the people to take action. It's also ensuring that people are rowing the boat. They're rowing those oars in the same exact direction that you want it to go in. Because again, without telling people what the goals are, everybody's going in a different direction. So I think it's really important, especially as a business owner, as an executive, or even managing your own financials, your own finance. Mm-hmm. You got to be the captain of your ship and you got to take responsibility.
Financial plans. We touched on it.
Sure.
I mean, at the end of the day, is it something? I mean, you were very passionate about how important it is, and I hear it. How many people actually have it? Is it just, am I putting you on the spot? Am I embarrassing society?
Yes. Hardly anybody puts these
I'm going to skip that question.
But Americans in general spend more time planning their vacations, where they're going to go, how they're going to get there, which is the best airline. They go to TripAdvisor to look at all the hotel
right.
But meanwhile, when it comes to handling their own finances, they hardly spend any time on it, and I just shake my head and I marvel because, we're only here for a short period of time. And you know what? You want to maximize everything that you can do.
Wow.
It's amazing.
Let me turn the question now the other way.
Sure.
How comprehensive should the financial plan be?
I think it should be very comprehensive, very deep, very strategic, very tactical. And again, it could be done very simply. Mm-hmm. It doesn't have to be convoluted. But you really want to make sure you capture everything. And I'll give you a great example. Mm-hmm. I had a very good friend of mine that unfortunately loaned the keys of their car to their au pair. And unfortunately, they ended up, the au pair ran over somebody and they got sued. Because they didn't have an umbrella policy, I mean, one of the most simplistic items of insurance to have, and it's a couple of $100 for millions of dollars of coverage, I'm shocked. So, it should be comprehensive, it should be detailed, it should be very deep in terms of what needs to be covered. But there are so many simple things that you want to cover first, what I call the low-hanging fruit, mm-hmm. that you just knock off the checklist, the to-do list, very quickly.
Now, moving along, what are some of the ways that people can monitor their progress? Now, again, you touched on this earlier by saying 90 days, and this is perhaps the answer, but just some ways they can monitor their progress and see if they're meeting their financial goals.
So I think you have a couple of options and choices, and it really depends on the listener and, mm-hmm. who you're talking with, because, again, you have to make it work for the individual, right? Mm-hmm. I can't tell you to do this, that, and the other if it really violates the way you do things. Right. So mm-hmm. some people are very visual, some people need details, some are big picture. It all depends on who you're working with. And what I find for us, and we get very granular and very detailed, what we do is we have software, proprietary software that we maintain for clients where we have a balance sheet. So I could look month to month, quarter to quarter, day to day,
wow.
and evaluate how a client's doing. Before the collapse of Lehman, I had clients that were worth millions, and then over the weekend, on Monday, they were worth zero. And I got to see in advance, what was going on in their balance sheet. So we could communicate very quickly with clients. So I think for the most part, whether you track it by paper, right? Mm-hmm. Here's my goal. Here's what I committed to. Where are my 90 days? You just pull out the piece of paper and you benchmark mm-hmm. where you are versus you put things online in a spreadsheet, or you use some proprietary software that's out there. And there's plenty of companies that can provide different financial software for this, for tracking.
Now, Jonathan Gassman, let's face it, all of us make some financial errors along the way. Any advice on learning from financial mistakes and then moving forward without obsessing with it?
One of my biggest financial mistakes that I've ever made was listening to...
By the way, you're on the air.
Oh my gosh. One of the biggest financial mistakes was, I won't say who gave me the tip.
Okay.
But I got a hot tip when I had gotten out of graduate school about a stock.
Okay.
And I knew nothing about the company, but this person knew someone who worked at the company that had an in. Lo and behold, we invested in the stock, quite a substantial amount of money for me, having just graduated, and I didn't have a pot to pee in. So I took a lot of money. I invested in this thing. And, I told this person, I said, when there's bad news or good news, just let me know. Months went by. I didn't really even look at my statements. And then one day I get my statement, and I see the thing is worth like a penny a share. Yitzchok, my heart dropped. This was the money I was using to buy my wife's engagement ring. So my heart dropped. I called the individual. I said, what's going on? He says, oh my gosh, Jonathan, you didn't sell? And I said, sell? How come you never told me? And he says, oh, I'm sorry. Yeah, we got out a long time ago. We heard that they weren't coming out with this drug or whatever, and I lost so much money. So I think one of the mistakes you learn is don't follow the hot tip of the day. Here's a guy who's in the finance business who got caught up in the emotion and the roller coaster ride of, the dot-com era. Mm-hmm. So I think you got to stick with things that you know and, follow the basics, have things like a budget, right? Save enough money, don't overspend, right. Have enough insurance because you never know when you become uninsurable. And, just mind your business, as you would say, mind your business. The bottom line is mind your business. And we tend to get caught up in things. So I think there are a lot of financial mistakes people make, overspending, not having adequate insurance to protect themselves. Nobody wants to die, but, death is always premature. You never expect it. And I find people are uninsured and they leave their families with nothing. Or they haven't saved enough for college. So I think there are a lot of faux pas out there that people just fall into constantly without even thinking about it.
How important is it for someone to diversify their portfolio?
Well, just think of all those really smart investors that put all their money into Enron. How good did they do? So, the name of the game is diversification. Diversification, wins the game over and over. Are you going to hit grand slams? No. But are you going to lose all your money? Probably not. So, to the extent you could buy a lot of different things, a lot of different asset classes, a lot of different asset styles, the probability is you won't lose your shirt. But again, you look at a lot of companies over the years, whether it's the likes of Enron, Eastern Airlines. I'm dating myself now. Yeah. Kodak, our friend Jeff.
Right. Jeff Raisler.
Look how many people didn't see what was coming, and they put all their eggs in one company, and they've lost millions of dollars, which could be their retirement savings. Right. It could be their college funds for children or grandchildren, legacy value, and it's truly unfortunate. So diversification, if there's anything you get from this conversation, diversification is number one. It's key to financial success and freedom.
Well, Jonathan, I'm going to put you on the spot here. Do you have any predictions for where the market is heading?
Absolutely. It's going to go up. It's going to go down. It's going to go sideways.
You told us that already.
Yeah, listen.
I'm trying to put you on the spot here.
Yeah, listen, I think there are a lot of wonderful opportunities in the market, regardless of whether interest rates go up or interest rates go down. There's a lot of great opportunity to invest today in specific areas that are going to go up. And I'm not going to tell you my secrets today.
Okay.
That's why we'll hire guys like us.
And we'll also have you back on the show in the future.
Gracias, por favor. So I think the market, you have to realize you're in an election year. There's a lot of challenge. Interest rates going up. People are very concerned about jobs, where things are going. So you have to expect there's going to be some volatility. We've had some great years, and now we'll have some okay years, or they may not be okay. But overall, people are paying less for gas at the pump. You're paying less for milk in the supermarket. There should be more money in your pocket when all is said and done. So that should enable you to save and focus on your goals.
77 WABC Radio presents Mind Your Business, hosted by founder and president of Bottom Line Marketing Group, Yitzchok Saftlas. Mind Your Business focuses on business and marketing strategies for success.